preferred measure of inflation, this PCE data. So tomorrow, this time is also key. But coming up, we got the second reading of US GDP. It came in at 6.4% for quarter one. The first reading, second reading, not as significant as far as, or typically significant from a volatility point of view in the markets. We've also got durable goods and a bit of other non-based defence data as well. So key data dump in about 10 minutes. So let's just see who's in here today. See if anything's connected. It's always a technical issue. Thursday ahead, and obviously we've got the other key data is the weekly unemployment claims. Remember last week we had this dip down to 444,000 for the initial claims. That's another positive tick in the box. It's a new pandemic era low. Remember, normally it's about 250,000, but we went to 6 million, didn't we? March of last year. And so that was positive, the initial weekly data coming down, but the 4-weekly average and the continuing claims, i.e. those that have been unemployed for a longer time, the extended unemployment group of people, that actually went up, surprisingly. So that's another sort of stick in the mud potentially for the strength of the recovery in the United States. So let's see what happens with the data later on. So let's get the charts out and me back on. I've disappeared for some reason. Why have I disappeared? There we are. You thought they would have figured it out already, wouldn't you? So what's going on today? Well, the dollar. This is the dollar index on the 1-hour chart. So yesterday we had a strong recovery. Yesterday, two things were coupling this. This was a weakness in the euro and a bit of recovery in the dollar, and this was a lot to do with speak from central bankers. There's one member of the ECB was talking about possibly looking to taper as well soon, and also Quells, the vice president or the vice chair of the Fed, also talking about tapering coming back onto the table, he's open to opening talks. So that obviously the next meeting of both the Fed and the ECB in June is likely to start, markets are going to start pricing in possible taper talk coming through. So dollar recovered on that over the key psychological 90 level, and we've been quite volatile today, flipping around through that key 90 level on the dollar index today. So let's have a look who's in. So we'll see. We've also got pending home sales. Forgot about that as well. We've got pending home sales later on today at in about an hour and a half, but 5 minutes. We've got all that key data out of the United States. Job claims, the second reading of the GDP. They call it the primary reading, don't they, the Americans? But it's the actual second reading. And durable goods as well. Remember, durable goods, those goods that hang around for more than 3 months. So things like computers and other hardware equipment. So see how that goes. And the non-defense number is the one taking out the aeroplanes. Which will grab attention. So let's just run through expectations. Durable goods for April expect to rise 0.7%, so down from last month at 1.0%. The non-defense, those that takes out capital goods, 0.8%. The headline GDP 6.4% last time, 6.45% possibly this time. We'll see again how that comes on an annualized basis, but the quarterly basis 4.1%. So see where that goes. Claims, another key number of 425,000 the market's looking for. Remember 444,000, so that trend on the initial claims keeps going down. But we do need to look at the initial 4-week average, still over 500,000. Is that going to be the case today? 504,000 went up last week. And the long-term claims also went up, so that's a bit of a question mark over the jobs that are being the jobs that are being filled, and also there's quite a high rate of vacancies that can't be filled as well. So there's a mismatch there between unemployment's coming down, but still a lot of people coming back into the marketplace looking for jobs. There's still a lot of US schools closed, so there's lots of parents at home still that might not be back in the jobs market. So that's an issue to bear in mind as well, as more and more of the economy opens up as we move into the summer months. See where we go. Dr. Prasan, good afternoon to you. How are you? Or good evening to you. Hope you're staying safe and you're well. Anything you want me to have a look at, anything you want to talk about, please let me know. So, dollars firmed up a wee bit yesterday, but as you can see, the daily trend here on the dollar index remains very much the downside. 4-month lows we touched earlier in the week, 89.49. So big lows down here. This 2021 low here was 89.14. You see on for the dollar index. Euro, on the other hand, had been rallying up, and here on the 1 hour chart, we've moved down under the key 122 into close yesterday, and we've been pivoting through that today so far. So we're back under 122 at the moment. Yen back to breach 109. We've been capped by 109 for the last 5 trading days. Moved through it yesterday on to close. We're at 1937, top end of this range that we've been in for most of May. So the May high here, as you might it's on this chart, but the May high on an end of day basis is around here 109.63 to the top end of this. So dollar moving up. Remember, the other key thing as well, we've got this big data coming out in the next minute or two. We've got the PCE data tomorrow, and also we've got the US and the UK. This UK, remember, the centre of the forex market, closed on Monday. So it's a long weekend for the UK and US and Canada. So there'll be lots of balancing as we get into these last 2 trading days of the month. So lots of month end moving around as well today and tomorrow. So watch that as well. Cable says, Dr. Prasan, cable, so we just looked at euro, but cable here continued to have a good session. We've had a big spike here in the last hour or so. I'm not actually sure what's caused that because I've been out away from my screen. So, Dr. Prasan, if you can tell me what's caused that huge leap, or anybody else for that matter, but we were down to test 141 earlier this morning, and then we've had a big move up in the last hour for cable. So cable's up here, spiking higher in the last hour. The 4 hour chart remains relatively weak, but again moved up in this candle here. So moving quite strongly. The end of day, still seeing this consolidation. So we want to break over 142 to go to the upside for cable and see what's going on there. Somebody just posted. So really consolidating the highs. It remains bid on the higher time frames, Dr. Prasan. I don't know what time frame you trade, but really that 21 moving average there at 140.70 is the key support level. As you can see, even the 9-period EMA held, or has held, I should say, for this rally in May. But again, just might be some profit taken as we get into the end of the month. But big candle down, or significant candle down yesterday from the doji candle the day before. But we're bouncing back up now in this current hour. So again, it could be month end shenanigans that's going on. The data's not quite out yet. It's running through. I've got a slow workstation here, so apologies for that. But see how that data is running through at the moment. So yeah, cable remains bid. The 4 hours moved back up from the down leg we'd moved, and the 1 hour, obviously a big strong candle. Suggestion, earlier that it was moving up. Bounced off 141 through 141.30 and moving to the upside. Schubert, good afternoon. Schubert saying gold crash. Well, don't know. Gold had a really strong run. This is the 1 hour. You can see going all the way back to May the 13th here. This is a 1 hour candle, so moving up. Nice break through this 1875 and 1819 area. So we've got the daily time frame. Let's zoom that. You can see that was a key level we'd got to. In fact, it was a weekly time frame. Zoom that up a bit. You can see this was a key level to get over last week, and we did. We closed over 1875 on that higher time frame, and here, so a third week higher, and we're up again this week. Tested that over 1900, tested into 1904 was that next level. So those 2 levels we were talking about, the higher time frame had been hit, so some nice pips there. The daily continues to trend high, and you see we've been over the 21-day moving average here, the EMA 21, or the midpoint of your Bollinger Band, if you've got Bollinger Bands on your chart, or most of April and all of May, so it's still rallying quite well. So Singlet, I don't know what time, I mean, it rolled over, it could be the May high here that we poached there at 1913, but down yesterday on a small doji candle and down again today at the moment. But on an hour's basis, it's hardly a sell-off, my friend. We've gone short here yesterday. That's moved down, closed you out here, flat really, gone long. That hasn't worked out, gone short again. So that's short from 12 o'clock, Super, on the end of day time frame. Stephen, good afternoon. Anything you want to talk about, please let me know. Kofex, Euro on the end of day, on an hour basis, had moved down in under 122, and it's been quite volatile today. So a bit of volatility here. Again, remember, it's the end of the day. Let's have a look at this data that's come through. See, there's no particular, if we got the euro here on the 5 minute, there's been no particular reaction. Obviously, dollar strength potentially on the news. So let's just run through the news. So initial claims, better than expected, 20,000 better than expected, coming in at 406,000. It was expected to be 425,000, so it's better than expectations, and last week was 444,000, so it's a significant improvement. 30-odd thousand claims are disappearing, so less people claiming unemployment for the first time. And the 4-week average has also dipped quite significantly, and so it bounced up last week, and that was a bit of a worry, but we're down to 458,000 new for the 4-week average. So that's a relatively positive number. So remember, it had gone up last week, so it's come down. It's beat expectations. So initial claims 406,000 from 444,000 last time. Durable goods orders has beat expectations again. Last month's also been upgraded. So 1% for the headline core durable goods orders, 1% for above expectations of 0.8%. Monthly ones, though, have slipped. The durable goods orders month on month has slipped a tad, but GDP is better than expected. So the key headline, GDP better, initial claims better, and durable goods headline numbers. So headline numbers are better than expected. 4.3% for the second, or the preliminary reading of GDP. And some early PCE number here, core PCE number 2.35% as well. That's better than expected as well. So the only worry was the core durable goods at minus 1.3%, but the annualized GDP 4.3%, and the headline is really sort of coming the headline preliminary data is also coming with the initial outlet, so it's at 6.4%. So the 4.3% for the quarterly number for April is better than expected, and the annualized one is 6.4%. So that's in line with expectations. So initially the dollar improved here. We got the euro back to this 122 here. This is the 5-minute chart, guys, here on the euro. So it's not really changed things significantly. It's quite a significant amount of data coming out, but it hasn't really impacted the forex pairs at the moment. Dollar initially improved, but it's weakening a bit now. You see, this is the euro. Dollar index itself, if we go down to the 5-minute chart, see with the dollar weakening on the news, and continues to sort of slip a tad. Cable will be perhaps back off up. It's followed through here. Let me go to the 5-minute chart here there. So it's that's that big rally we had on the cable chart before, 140, 175. So it's up and moving higher. CAD has continued to unwind down under 121. Earlier today, the news itself, as it's broken, has just gone. This is the 5-minute chart on CAD. You can see that's just continuing to unwind as oil as that's continued to move back under 121 or 120.80. So let's have a look at some questions. So it wasn't really a crash, Kuba. Solvex, Covex on euro. Again, guys, put your time frames in that you trade. But here's a 1 hour trade. It's dipped down under 122 and it's really gone sideways today. No direction. You can see it on an end of hour basis. We want to break over 122.05, really 122.04.60 there. 122.05 is the key number. And we've got support here today on an end of hour basis, around about this 121.82 basis. That's our channel so far, as demonstrated by that hour candle there at 10 o'clock this morning. So 122.05 to the upside, 121.82 to the downside so far today. We did have a spike a bit lower in the Asian session, but really that's the key low, 121.82 for euro. Stephen, cable today. Again, put your time frames in, guys, if we can look at it a bit more detail. But as we said before, Stephen, we've got cable. Let's go to the cable. I don't know what's happened here. That's quite a strong number. So we were edging higher. We were at 141.24 and we went to 141.71. So we went 50 pips, quite a move in that hour. I don't know what news broke. I've been away from my station, as I say, but before, and this was obviously before the US news. So the US news here, the durable goods orders, the weekly claims, and the GDP has really sort of stifled the dollar's recovery. So the downtrend in the dollar really continues from that recovery we had yesterday. We can see this with here on this cable chart here, the 1 hour chart. So that 141.90 comes from a higher time frame. That's the an end of day close, really, from the daily perspective. So if today or tomorrow the cable pair, this pound dollar, clear 141.90, see how we haven't done it for 1, 2, 3, 4 days in a row. 5 days we tested. So 141.90 to the upside on the close today or tomorrow would be quite a positive start, a positive outlook, and then we could expect to take 142.40 as our next target, which was that intraday, the February high from February the 26th. It wasn't it? Here, this one here for cable, and then above that, I think it's still on here. Yeah, this 143.76. I wrote about this yesterday, Stephen, on the website. So 143.76 after this 142.40 high, and that takes us back. We go to the weekly chart. That takes us all the way back. In fact, it's a monthly chart, isn't it? That 143.76 takes us all the way back here to May 2018. So quite a significant line in the sand there. 143.76 takes us all the way back to April 2018. So again, do the maths. That's a 4-year, or would be a 4-year high for cable if that breaks out. So 149.90 is the one on an end of day basis you want to watch in the next few trading. As I say, we rejected it for 4 days, down quite significantly, but key support is there at that 140.60 on an end of day basis, where that 21 EMA is. Stuart, interesting. No, it doesn't appear to be, does it? The key news, we're waiting for this big data dump. If we got to say, just use cable as an example, and it's it's still, well, actually it's come down, pounds come down. This is the 5-minute chart, but the data was released here at 30, so it's 15:30 on the chart. So we've gone up and then moved down a wee bit. So not sure what's really moved that there. Not a great deal. Gold as well. Some of you are asking about gold. It's got a spike. This is the hour chart. Got a spike lower on the data, I think. Sorry, what am I talking about? Where's the data? The data's breached there, so we got a spike higher, I should say. Dollar weakened, and it's sort of run out of steam a wee bit. It certainly doesn't want to get to 1900 again today on this chart. 5 minutes, sorry. So we're 1896, spike down, drifting lower. Not a great deal of direction today. So moved down again for gold. Really, yesterday's low on an end of hour basis was at 1893. The spike lower yesterday was around about this 1890 level, but today's end of hour high is just over 1900 at 1901. So 1900 itself is our pivot area today on the gold market. Let me just see Facebook questions, because they don't come up on my feed here, unfortunately. Was he on Facebook? Questions on Facebook at the moment. Okay, so where were we? Euro, pound, so we've done all those. Okay, so no, there's not really been a significant effect of the news, to be honest. It's sort of been taken in its stride, so the trends continue. So let's just go through these as we see them. So the dollar index here on the 1 hour basis, we had this very strong rally compared to what we'd had from this 4-month low down here at 89.49. We're rallied back over 90, but we're sort of struggling to hold over that at the moment, aren't we? We were an hour over, 2 hours over, and then we closed under, and at the current hour, still with 15 minutes to go, we're still under .90, so it's still relatively pressured the dollar itself. Oil market with inventories yesterday holding up. This is the end of day basis for the oil market, so we've had this big shakeout last week on the worry about Iranian crude coming on, being perhaps too. Just turn the light up a bit. It's a bit dark, isn't it? A bit down. And we panicked from this 67 high all the way down to 61.50, but we recovered just as quickly. We bounced off that back into the channel that we popped out of from the beginning of April. So 66 is where we trade. 65, 60 is where we trade, and 66.20 has been our closing high for May. So again, two areas to watch. Remember, as I say, this volatility we're seeing isn't unusual on all the markets as on this end of day basis. As far as the equity markets are concerned, quiet couple of days yesterday and today. Yesterday and the day before, Tuesday and Wednesday, and a big recovery on Monday to start the week. Thursday we're also flat. This is the futures market, so we're at 41.95. Obviously 4,200 is the next level, and then these all-time highs up here at 42.26. This May high as well. So again, watch that. How we're going to hold? But again, sort of moved down. Didn't want to move much lower. Relatively significant sell-off as we went to 40.28 on the S&P 500, but then moved back up. The Nasdaq, on the other hand, did the same thing, but have I got a Nasdaq chart here? Nasdaq, similar sort of move on it, cooled more so. So it's the daily time frame here on Nasdaq remains, back over its 20-day from the big earlier shakeout into 12,600, and then we've recovered, and we're at 13,600 plus now. So again, it's quite a significant move down. Turned higher here earlier in the month, and then a strong day again, as we saw, bounce back on Monday, and then we cooled a wee bit Tuesday, Wednesday, and went down a bit today, but still held up. Remember, as I say, it's month end coming. PCE tomorrow, as far as the forex markets are concerned, but we've got that month end balancing, and equity markets still relatively well bid on the weaker dollar outlook. But as tapering talk increases and becomes potential reality, we could see the dollar coming back from these multi-month lows and quite significantly. But we'll see, how we go. The chief spinners, Clarida and Powell himself, still remain much more, but dovish. Although Clarida said, obviously, earlier in the week as well about the potential is, of tapering talk, or more discussions about that. But Fed leading central banks remain on the dovish side. So 13, where do we trade today? Let's have a look. Nasdaq relatively flat, 13.64 an hour or so before the cash markets open. So, any more questions? No, it doesn't look like everybody got here before the news and nobody's here after the news. Let me go back to Facebook. Jamil's saying pound on the 15. Do you mean 15-hour chart? Do you mean the 15-minute chart, Jamil? Let's have a look at pound anyway. Now let's do those two time frames. I'll tell me if it's wrong, my friend. Okay. So Jamil's asking about pound. This is pound on the 5-minute. Again, it's lipped higher. 15-minute. This big spike here at 2 o'clock. So there must have been some news that broke. Whether that's politically or economically, I don't know. I didn't see it myself. Let's have a let's see what I can scan for the reason we got that bid on sterling. Sterling's really stronger across the board, to be honest. It might have been Johnson saying there's nothing in the data currently open. The June 21st reopening. I don't think that would have. That was earlier anyway. That was before that 2 o'clock. So I don't know. It might have been just some movement against the dollar. Nothing to see. My sterling was stronger. I think to see particularly why. And no, can't see anything in there to say why that was particularly. But I'll say, Jamil, if you're looking at 15-minute, well, that had been, it's short. Then it had gone long here, stayed long, gone up short, big long here, but quite messy there. But it ran to a high on the 15-minute chart there, 141.78 is the high. Obviously, we've got this big extended candle, but again, it's been sort of anchoring up. For most, or yesterday, wasn't it? Yesterday. Okay, it's 15. Hasn't it got today? I've got today's break on there for some reason. This is the 26th. It's the 27th. So it's from today. So we dipped down off 141 through 141.30. Through 141.50 and 141.78 is our high. So, and we're still above 141.50. So that's still holding up. Your initial support now here on that 15 minute is there is 141.47. So just under 141.50. So that 141.50 becomes quite key, Jamil, my friend. But as you say, if we go up the time frames, obviously we've got these big candles here. This big candle because of the movement. But again, the 30-minute was doing the same thing. 1 hour was trending higher gently. We sort of crossed here. In fact, that would have been a very weak entry there at on this strategy here at 1 o'clock. Again, big wicks rejecting, so it's a very, very weak entry. But then, it's followed through quite aggressively. So people may have got in at this point as well, but as you see, we went to the high from yesterday, and that 141.90 we talked about earlier on the higher time frames. Jamil is that end of day area. Let's go to the daily time frame. That end of day area that we haven't been able to break or close above for all of May. So let me zoom up the daily. So you can see this. That's that 141.90 area. So 1, 2, 3. 4 days, really banging into it, but just couldn't close above it. Moved back down the next day, tested it the day after that, and then moved down again on Wednesday, and we're bouncing back up today. So today, Thursday, we're going to close high. That'll be positive for bulls, but really we need to close over that 141.90. Whether we do it on the end of the month, which is tomorrow, remember Monday is closed, long weekend in the UK. And Canada and the United States. So see if there's some month end. Euro dollar on the 1 hour. How is the fundamental analysis from now the end of the year? Is significance. You got. I'm not quite sure what you mean there. If you're going to trade the 1 hour time frame, Jepheth, end of year. Fundamental analysis to the end of the year is it's a long way away, obviously. If you're talking about your trading euro on the 1 hour time frame, well, you need a short strategy. So this is the 1 hour time. Really see it's been very choppy today. As I said before earlier, we have a top today at 122.05, so just over the 122.00 level, and a low today on an end of hour basis there at 121.82.83. So that's our support so far. Obviously, in the Asian session, we went even lower into the hour, all the way down to 121.75, so that can't be ruled out. And at the moment, we're moving back down to 121.86 ahead of the US Open. Having digested that data, it's sort of the headlines are all sort of feeding into a bit of a better dollar. So let's just go through those headlines. We had a beat for quarterly GDP, 4.3% compared to 4.1%. But the headline, 6.4% held, but there was expectation it might tick up to 6.5%, didn't it? It held at 6.4%. So you could argue that was a miss, but it's basically held at the initial reading of it, 6.4%. Very good. Obviously, the bounce back for US quarter one. PCE the PCE that came out was a bit better. The durable goods headline core was 1%, so that was better than expected. It was only expected to be 0.8%. Last month was upgraded very significantly to 3.2% from 1.6%. So it's showing some sort of holding of hardware, of durable goods. That's what they are, And if we take out the aircraft, the non-defense capital goods orders, key number, that was a big beat, 2.3% compared to 0.8% was expected, so nearly 3 times expectations. And the previous reading for March was also upgraded nearly 50% from 0.9% of 1% to 1.6%. So in fact, more than 50%, wasn't it? It was a significant upgrade for that. So that's another positive one. But the durable goods headline for April was minus 1.3%. Compared to expectation, 0.7%. So a bit of a mixed bag, but really biased to the upside. We're sort of starting to see that play out now as the dollar sort of starts to accrue in here. Euro at 121.91, significantly, not significantly, but 10 pips below that 122 level. And this is our 1 hour time frames under the. Well, again, we'd been under the 21, the 9, and the 5, but really. Today we went sideways and moved up, waiting for the data, and it's sort of biasing down at the moment. Okay, so there we go. Where are we? Right, so questions are coming here via Benita. Good afternoon. Anything you want to talk about? Any particular asset? Any particular time frame? Please let me know. Vicon, good afternoon to you as well. Good day, Peter. Good afternoon. Hello, everyone. Michael, right, we've got a request. Pound yen just spiked in the last hour. It did indeed. It wasn't just the pound yen, Michael. It was all sterling crosses. I haven't got all the crosses here, but let's have a look. This is we've got the 1 hour. This is cable spiking in that 1 hour, and we've also got, like you say, euro also down. So it's definitely a bid on sterling. This is. Actually, that was that's 1 hour. So again, this is the pound against the Kiwi. Back to that 191.41 area we were talking about yesterday. And let's have a look. Where am I? Delete. I've lost. Pound yen again. That big rally. So the pound yen rally, a bit like the cable rally. So a big beat. Big rally for sterling for some reason, but again, as you can see, for the week we've been sort of really not much happening. So you're going to taking it short, taking it long, taking the shorts and stopping you out. But if you'd followed this strategy, you would have basically caught that big move because you would have been long following the rules. Obviously, gone short there and it hasn't worked out. That was a losing trade there. If you'd gone short at that point, stopped out there, so it's turned around. But here, it's the beauty of trending strategies, or one of the key benefits of them, is that it looks really dark. Am I really dark on this video, guys? Let's turn me up a bit. Don't get too light either, but anyway. So if you've been long here, which you should have been if you've been following the strategy, and you're trading your stop loss, that's a huge pick jump. Whether you want to pop out because it's moved so aggressively, I don't know. But yes, it's gone higher, Michael. Does that affect the higher time frames? Well, the 4 hour we're looking a bit perky as well, having gone sideways. So these are some levels here that are on my chart here for some reason, and they've all been ran to. So 154.50 and 154.90. I think that was a top we were talking about, and a range, perhaps on a day time frame. Yeah, it's a new top. So there you go. See what's happened there? We've gone to a new high. This is the end of day basis for pound yen, the good old guppy. So we've broken at the moment, if we close up here, we close above this 154.45 area. That'll be a new high for the month. You can see how we've tracked high for the month, moved up for March, a bit sideways for April, but we've moved up on the 10th of May, and then we legged higher again, what looks like at the moment today, but obviously you can't tell that isn't closed yet, that day candle. So, but as far as the 21 end of day moving average is concerned, we've been long since the end of April there. And again, it's just trailed up, and you've stayed in that. And another buying opportunity as it's gone into the end of the month on an end of day basis for the pound yen. Again, remember, as I keep saying, you've got Thursday and Friday, the last two trading days of May for many traders, because they'll be balancing their books. Monday, technically, is obviously the 31st of May, the last trading day, but London is closed, New York is closed, and the Canadian market is also closed on Monday. So big players based in those cities wrapping their books for May will have already closed. I'll be closing them today and tomorrow. So cable guppy to the upside. Michael, I don't know what time frame you're trading, or are we just pointing it out as a potential movement? Somebody's spamming me, but there we go. What else have we got? Shakia, hi, good afternoon, Peter. Oh, good day to you. I don't know where you are. What's your taking it now, says Peter, regarding the yen? Well, the yen, dollar yen hasn't really been doing very much over the last few days, or few months. Certainly, most of May, it's been trapped in this range here. So 108.55 is our floor, and 109.65 is our high here for May. So again, another one is it's a bit of a stretch perhaps today and tomorrow to get over that 109.63, but we shall see. But as you can see, really sideways action on an end of day base. So not a great deal going on, to be honest. So 109 becomes has been a key pivot on an end of day basis. It's ticked up here yesterday. So again, having been short there and it not played out, that would have closed you short for a losing position and reversed immediately to go long on an end of day basis. A bit more volatility intraday. 4 hour candle again sideways would have triggered would have triggered about here this morning at 8 o'clock, and that's been long back over 109. So your 4 hour, in fact, it was yesterday, wasn't it? This morning. I closed out the short position. I would have gone long on that one. MACD's turned up here on the 4 hour, 1 hour, trending, dipping, gone long again because we're back over the 5 and the 9 of cross, and it's trending higher. So it's sort of pushing again. Peter, depends how long you're holding this for, my friend. But 1 hour's long, 4 hours long, and the end of day is long as well. So did I say end of day is long for KR? Didn't I? Well, yeah, just not really. It's sort of flat. I'd like to see that back over 109, hold over 109 significantly if that's going to go higher. Kaniga, just hit margin call on Euro New Zealand. Yeah, margin call happened, my friend. It's part of. Make sure it's not the end of the world, Kaniga, my friend. Just write it down, see why that happened, but nobody wants a margin call. Margin call, that's you would argue, or I would argue, that's not bad trading, but be careful with your risk management. Be careful with these pairs that have a wider spread. They might look interesting. Were you long or were you short? I don't know. Let's have a look. I don't know how you trade it, Kaninga, but yeah, be careful. Obviously, all the time. Good traders, great traders, always talk about risk management as being important, and indeed it is. And it's absolutely vital in my sense. You've got to watch that. Can you Swissy going high as well? What's your thought about it? Well, Swissy had been really in the absolute opposite. Can you again? What time? When you're saying going high? What time frame? I'll say here and now. Yes, it has. But if we go to the daily time frame, an end of day trade, what the big players are trading, that's trending lower, isn't it? It's been under. This is an end of day basis, so lots and lots and lots of pips had over April. Less so in May, but we're trending down. So this might just simply be profit taking as we get to the end of the month. But Swissy remains low. There's no reason to potentially, unless you've been in and out. That's the 21-day or 21-day exponential moving average, and we're still way below that from the break that when we first crossed and went short on the end of day base. So that's just been a trend that's been added to. That's key. This 90. That's the key 90 level there for. Let's put that in as a thick line on this. I had to change on my chart, so. So let's make that a bit of a thick one because it's 90, isn't it? Yeah, it's. So .90, we've just got back to now as a key level, and we're sort of bashing into it now on an intraday 4-hour, trending lower. Remember, the bias is the downside, so you're going against the trend if you take long positions at the moment. 4-hour would have triggered high here yesterday, and it's been long since. It's looking okay, and the 1 hour would have gone up and down, I would guess. Yeah, down we go, up we've gone. Up to go short, didn't, and then it's gone long here again this morning, 9 o'clock, and it's moved up. So 90 is a key resistance, big round technical level. A big round number, but also key technical level here for this retrace. But the next resistance on an end of day basis, higher time frame, sits up here at the 21 EMA at 90.36 or 90.36 to the upside. Kaniga, again, I don't know what time frame you're saying it's going high as well. If we go down, I don't know if you're trading 15 minutes, it certainly has moved quite rapidly to the upside today from the lows. But again, it's a bit of dollar solidity, a bit of dollar strength from the data that came in. As things put on air, gold starting to crash. Well, maybe the theory, the worry about inflation, maybe cooling from Quell's comments, from other central bankers' comments potentially, but it's certainly gold remains quite robust. And again, gold here. The first sign of the gold cooling a wee bit was this back after it rallied. But remember, these are two key higher time frame targets: the 1875 on an end of day basis last week, and then 1904 was a nice target. We did get as high as 1912, and we started to move down yesterday. Two significant candles. Remember, the candle size is important as well. Two very large candles on the gold intraday 1 hour chart there. So that would have initially taken you short there. Your stop loss would have been still up here, a few candles behind. You would have gone. Maximum would have pulled my stop loss down at this 104, so I may have been taken out. But then you'd have gone short again, and again kept your stop loss big because that was a huge candle. Closed out there, it's gone back up. So mixed trade. Then gone short here this morning. Again against the trend. Remember, intra-hour, 1 hour time frames. You might have got some pips in that. I don't know how you would have set your targets, but then it closed back up. So that would have been out, and it's sort of biasing downward. But to say it's crashing, depend on your time frame. If you're trading it on 1 minute or 5 minute, it would have looked, some of these moves yesterday and again today would have looked like a bit of a crash. But as you can see here, this is a good example of waiting till the candle's closed. You know, if you're a 1 hour trader, that was short, and then you went all the way down there. You're really excited, but look what happened. The close of the actual hour, the candle actually closed back up, so that was perhaps taking you out of any short position. It's all about time frames. It's all about the higher time frames, the lower time frames. The time frame that you trade has to fit with your personality. That's by far the most important thing. Peter, US is correcting. Bullish as taking it back on 15 minutes. Let's have a look at yen on 15 minutes then. As I say, I can't get dailies. There are levels. Remember these lines here on the daily time frame. Let's go down to Peter's 15-minute time frame and zoom in a bit and see a bit more action. Well, it's been, it was bullish. When was this? This was yesterday. It was sort of airing to the upside. We went over 109 middle of the day yesterday or late on yesterday, continued to track up, moved back down. But again, you see clearly today we've got a support there, 109.05 on the 15-minute, sideways, moved up, retraced, but we didn't retrace back to these lows here. For you 15-minute traders, let me just put that, you can see that low there, 109.05. Retraced, that was okay, that's healthy, but then gone long again. And the good thing was, if you were trading this on that, you see we didn't retrace to the lows we'd done in the early part of the European session here as lunchtime approached, as the data approach, and then we've moved up from there, then broke the high here. See how we broke the high there? It's going to go on as a thick one, isn't it? So let's change those two. What's that 108, 63? What's that 109? So let's just make that for this 15 minutes. Make it. What's that one we just put on? Let's make that. That's our 15-minute dotted lines. Okay, so that's our little. See how we got this candle then, having triggered here. That's your certainly follow-through candle there. Now we had a big move up to 109.37, 36 moment at the moment, but because it broke above this level here, which goes back to earlier today. So yeah, it's ticked up certainly on that 15-minute time frame. So see what maybe the bond market's moved things. But thank you for reading my comment. Yeah, I'm a day trader, still new to this 1 hour time frame that I was referring to. But don't get on a 1 hour time frame, Kanga. Excuse me. Obviously, you're a day. You say you're a day trader, but there are 24 candles in a day, so you've got to wait till conclude. It was gold you were talking about, wasn't it? I think, if I remember. Euro, New Zealand. I haven't got that here, and Swissy. Swissy. Let's go back to the Swissy one. Swissy. Here. Your 1 hour time frame. It's triggered. Here using this EMA crossing strategy, the last big trade would have been this big candle here yesterday, around about the 2 till 5 candle, because it's moved up big. See how that is a huge candle. It's absorbed, or it's engulfed, as we say in candle speak terms. This big candle here, or these 2 hours here, has absorbed all of this action that had gone on overnight in the Asian session. So this big afternoon candle in the European session, this 2 o'clock candle yesterday, we'd moved up and it continued very volatile. But if you'd got in here, your stop loss should be down here, because that's 2 or 3 candles below, and it would have stayed there as you'd moved up and up, and so that volatile spike there would have kept you in. By the time we start moving up here, you want to start then moving up your stop loss perhaps to here if you're trending this higher. So you've still been in. We've gone higher. We've rolled over here. You might have closed it out at the end of the day, which is fair enough. Come back this morning. I don't know what time it is, and perhaps remember you were going long. It looked like it was going to go short here. That would have been a short trade. But within the hour, Kaninga, on this strategy, you would have been out because it would have closed you out. And remember, going short here, you were, look, the 20 was flat, hadn't moved, well, it had gone flat, but this had crossed and gone short. So that short position there was closed out there because we were now back over the 9-period EMA. And immediately gone long, or you might have waited for an hour to see if it was going to turn around. It did, and then it's fallen through, and again, it's followed through. This candle here, the red candle, then's retraced a wee bit, but it's retraced. You would argue 50% of that move, but it hasn't retraced below this candle here, the 11 o'clock candle. 12 o'clock candles follows through a bit. Again, it's been engulfed by the negative candle, but still positive because we're still above the 9-period. Even here, we did break under the 9-period EMA, so you're still long. Then we got to the 90, and not surprisingly, we stalled at .90. So again, it's all about the time frames that you trade, my friend. So Camilo Gutierrez, Euro 1 hour, how's the fundamental analysis? We did that one. Yes, plus I don't know what that means. I've only got 4 comments on Facebook for some reason. Nobody's joining me on Facebook. Why not? What's going on? My Facebook followers. Right, Get Closer Records. Is that a real record shop, my friend? Can I see your logo? I can't see your logo there. Margin call, yeah, definitely new. Lower your trades. Absolutely. Margin call you don't want. It hurts. Understand what you're doing, Shakinga. Who said they got a margin call? Kaninga, yeah, was it Kaninga? I think it was, wasn't it? Yeah, margin call you said on Euro New Zealand. Yeah, go back and make sure, Kaninga, that you understand what margin is, that you understand the leverage on your account, that you understand the lot size that you're trading. Most people rush into this business. I don't know how long you've been trading for. You said you were quite new, but it's your cash, it's your money. You've got to respect it, look after it. Okay. Make sure. So let me just go through this again. Understand the leverage on your account. Make sure it's appropriate for you. Okay, leverage can get quite high quite quickly, so be careful on the account size. Understand the margin on the assets that you're trading. Understand margin on Euro, New Zealand dollar. Check our product page. Check out what it is. Make sure if that's who I'm trading. Make sure it doesn't change from asset to asset because it does. So make sure you understand that as well. Understand what a margin call is, 50%, 20%, or whatever it is you've got left on your account. So make sure you understand that as well. And most importantly, it's all about risk management. Make sure the lot size that you're trading is appropriate to the size of the capital in your account. I can't tell you how much to deposit. I can't tell you what's appropriate. But lot sizes go down to micro lots, 0.01, so you can start with real money with a very small lot size. But remember, a full lot is 100 times more risk than a micro lot, and 10 times more risk than a mini lot. So always bear that in mind, guys. Yes, it's 10 times and 100 times more the return is, but the risk is, more importantly, 100 times and 10 times more with mini and full lot size trading. So be careful about lot size, as our friend here, Get Closer Records, has said. So yeah, lower your lot size is absolutely correct if you can. If not, deposit more money in your account. If you can't do that, go back to a demo account. Get good, get confident first. Understand what you're doing. Understand the assets you're trading. You're saying you're jumping. To me, they're still they're still quite key crosses, Euro New Zealand and dollar Swiss, but they're sort of outside the mainstream. Make sure you understand the nuances of each thing that you trade asset, whether it's a currency pair or a commodity or a stock or an index or whatever it is. Make sure you understand the nuances, because they all have their own style, their own approach, their own style, their own personality. Some trend better than others don't. Kiwi yesterday was really, really strong. We had that Kiwi, the New Zealand dollar. Big positive news from the RBNZ as far as perhaps looking to taper again, looking to bring forward possible rate rises. So the Kiwi got a really big, strong rise. We went from down here earlier in the week before at actually let's go to the daily time and see what see the impact of the day itself. So obviously the dollars itself, the US dollar is weak, so the Kiwi strong, but we were in just again coming back to the month. In May we went all the way down. In fact, we started May under 71.30, but we'd been tending to the upside. 73 was touched earlier in the month. As we had a really weak run on the dollar itself. Then the dollar spiked up a bit. You got a bit of weakness in the Kiwi. Then we've gone sideways, and then we've had a run into the RBNZ, followed through on RBNZ day itself, tested over 73, pushed, and you see here intraday yesterday, because of the RBNZ, we pushed to new May highs. Indeed, it was May, April, March. So we go back to end of February when we were last over over 73, cooled a bit into close, but opened strongly this morning, and we're up on the day at 72.9. So again, remember Thursday, Friday into the end of the month. Obviously, New Zealand, Australia are open on Monday, but there won't be the volume or the liquidity of the London session, and certainly no US session. So true. Says Kange, I was too confident when Euro New Zealand was going long earlier, played my emotions again. Unfortunately, it went down so fast, 12 p.m. today. Going to be very careful of this. Thank you. Yes, emotions, my friend, and this goes around any trader. You've got to try and take them out. Don't get too excited. Don't get too scared. You need a strategy because you can't take them away. I see people on the internet and on YouTube and TikTok videos saying, yeah, trade emotionless. You can't because you're a human being. It's not possible. Don't try and get there. It won't be possible. What you do is minimize and control those emotions. So don't get greedy and don't get scared. Easy to say, difficult to do. We all get scared. We all get greedy. So what we do, we minimize them as much as possible. So we don't get too greedy. We don't get too scared. You've got to manage your emotions. Discipline, patience, fear and greed. The two, fear and greed, the only two emotions that really drive markets. People are intrinsically lazy, unfortunately, impatient and greedy, and get scared too quickly. The market, because we're talking about money, it sort of consolidates and focuses the human mind to be over emotional about money, but it's just a simple energy to allow you to do stuff. So yeah, things can be very volatile. Kanga, I hope you've written it down in your trading journal. I hope you've got a trading diary. You write all this stuff down. So absolutely, always be careful. It's always about risk management. Now, the great traders, the truly great traders, investors, call them what you will, that have been investing for many, many years, always say they know where they're going to get out before they get in. So they know if a trade goes wrong, they know how much they're going to lose. And they're cool with that because that's what, they've been doing it for years. And you can do that as a new trader. How much are you prepared to lose on a trade? Is it a percent of your account? Is it a dollar figure? If it's a dollar figure, you're going to have to trade the lot size. That means that you're only going to lose X number of dollars. Or again, same with the percentage size. But have a system, have a plan. Stick to your plan. Discipline, patience, fear and greed. Manage them, okay? Manage your emotions, my friend. But thank you for your comments and thank you for being here today. I appreciate that. Any more? Anything you want to talk about? Let's have a look. So, what was said about gold? Gold, well, depends on your time frame they're in. Remember, two things are happening. We've got the month end coming up. Okay, Thursday today, Friday tomorrow. Month end is actually Monday, but as I've been saying all afternoon, London's closed, Canada's closed, and the United States are closed on Monday. So bear that in mind as well. Gold, well, again, it's drifted lower here in the 1 hour time frame. Our high, two key targets have been hit, lots of profits and pips being bagged on the higher time frame at 1875 on the breakthrough there, and then a big strong rally from 1875 all the way. In fact, it spiked intraday to 1912 yesterday, but on an end of day basis, we've got the daily time frame. It's still quite big. We had a strong day on Tuesday, a bit of a retrace yesterday on close, so we closed lower yesterday. We had a red candle yesterday. Signs of a top coming in simply because we posted through a key level at 1904, which was 1905. So we're over the key 1900, but it's rolled over a bit today as well. So I don't know. During, again, I don't know what time frame you trade, but if you, at the lower time frame, so let's go down 4 hour. It's looking to drift over, but it's still above its 21 moving average. It's into it now at 1892. So 4 hour traders have probably closed out their longs, but not yet gone short. The 1 hour traders would have triggered and gone short yesterday at 6 o'clock. It's followed through into close. Bit of a retrace there, didn't work out. So the 1 hour is still tending lower. So 1 hour traders were short from this morning again. And below that, it's obviously much more choppy. It's all about the time frames that you're trading during. If you go down to, I don't know, 5 minute charts, we're using this same strategy. You're in and out, but again, you can see the 5 minute is biased lower all day, all afternoon. Look to go long here as the news came out, as the data came out, was strong-ish. Or goodish. For me, it was really quite good US data, but the market has decided it wasn't initially, and now we're turned lower again. So 5 minute traders were long, and now trading gold on the 5 minute chart has just gone short here. Peter saying he took the yen long. What time frame was that, Peter? You trade that? I can't remember. Was it the end? Was it an hour time frame? You were talking about yen earlier, weren't you? But and now you're in profit. Okay. As with any trading strategy, Peter, and everybody else, obviously, have a. Well, I'm saying have a target. You don't always have to have a target. I always talk about having a target, so it's a comfort thing. But this strategy, for instance, just is a trend following strategy. So if markets are trending, it's great. If they're not, it's not. It's as simple as that. And you get chopped and in and out. Yesterday and today's been great for trend following traders. We went long here on dollar yen at 10 o'clock, and we would have been long all the time. Again, one way of trading this is just to trail your stop loss up. So you would have got out, you'd have got in here, and you've been trail your stop loss up, sort of stalled into the end of the day. So you might have thought, I'll close out on the end of day basis. Looked like it was going to go short, but that would have certainly closed you long if you've closed it when it closes under the 9-period EMA. That's one way of doing it. But then you would have gone long again because the blue and the yellow have crossed again here this morning at 9 o'clock. We're not above the Asian session highs, but the European session's triggered higher. Moved down again. We trailed our stop loss up. So again, at the current, as I say, you're long. Your stop loss. It's probably down here. This 19, where this yellow line is now. This is where it should really be there because I see that's still only 2 candles behind. Quite 1913, but that's still moving up on a trailing your stop loss. Other people would say, well, I'm just going to be long from this next move here until it then closes under the 9 period. Watch my webinars on how to trade this particular strategy. There's lots of ways of trailing, of setting stop losses and trailing stop loss. Okay. Doreen, great question. What to look for when determining a market is trending besides the trend line? Well, these are moving averages, remember, and that's what you use. A good indicator for a very strong MACD, it's a combination. I don't think you can see that very well under this black background, guys. But the MACD, this histogram and signal line here, that's it's a combination of moving averages. It's a conversion divergence measure as well. But this is rallying up, then it's dipped down as it's dipped down here. So then it's moved up here. So histograms have moved up. To the high side. RSI is another, sort of indicator. Are we overbought or are we oversold? And we got into the, here on the 14, here with the RSI set at 14, we're into oversold zone. First time it's happened for a long time. Look at this on the 1 8. See, we're into that. Oh, you can't see that because my head's in the way. Let me. How do I get rid of that? Let me. Just move that there. Can you see that now? There, you can see that now. RSI has moved into the overbought area. Okay, we're over 70, but It's 74, and it's still rising. So it's still rising strongly along with these candles. So it's shot up. So that's looking relatively positive. Another way of measuring a trend, but here again, it's all about obviously eyeballing the chart. Obviously here it was sort of eyeing down. Look at the other key thing, Doreen. If you don't want to get too technical about it, is to look at the move. If you do have a moving average on it, look at the moving average. What sort of slope is it? A nice 30% slope is a nice trend. 45%. Anything stronger than that. So look at this. In this last 3 hours, it's got a bit steep, hasn't it? Hence, it's gone into this overbought area. Okay. And 109.40. And there's lots of other indicators. Another good indicator of strength of a trend. Here you see this is the MT5 platform. Lots of trending indicators to give you some sort of idea. Parabolic SAR. Let's put this on. And again, this flips. So you see it. If you're below the parabolic SAR here, the green dots here, that's suggesting it's going to go up. This is suggesting it's going to go down. It didn't work, did it? But we got quite close to it. So it's a strong reversal here. So parabolic SAR, parabolic SAR, SAR, stop and reverse. That's what SAR stands for. So we've gone up where it says here with strong uptrend. Then it looked like it was going to go down, but it didn't. It just went sideways. Now it's starting to move up. See how it corresponds to the moving average as well. All sorts of indicators. All of them have their pros and cons. None of them are perfect. Look for it. But parabolic SAR, another one. The problem is you have too many indicators. So find the indicators and the time frame that works for you. Another one. I haven't got what's ADR. ADR, another good one. Lots of people. Looks a bit complicated, but ADR, the ADX, not the ADR, ADX. If we put in 20, is a typical strength of the trend. So as you can see here, the problem with it, that's at 25, so that's a particularly strong trend. The green line here, that's a very strong trend. The trend weak, see how that's gone down. That line's gone down as the flat's gone out, and that's what this shows you. The ADX. It's the strength of a trend, not the direction, but the strength of it. So the higher the number, the stronger the trend. So we got all the way up here to 60 something. Did you get 55, and then it's dropped under a strong trend level here, which is what's happened, doesn't it? We've gone sideways. Then we've ticked up here, so that's interesting, isn't it? We've gone back into the 25. These other two lines are diverging as well. So it's a strong trend on that hour time frame. So lots and lots of indicators to have a look at. Peter's right. So Peter's saying he's long yen 15 minutes. So there's lots of indicators on here now, Peter. So that would have been, if you're 15 minute, you've had a strong 3 hours. So very nice for you. I'm sure you've got some good pips on that RSI over there. But if we go down to 15 minutes, see what the indicators are saying then. So here on the 15 minute, the market just poked into overbought area, but it's still going. It came out of it and it's back into it, but it's that's because of these strong candles. The parabolic SAR would have flipped or did flip here, so we were moving up. Then we went down through that level we talked about, that 109.20 level, this previous high here from earlier in the day. We burst through that. Parabolic SAR swept from negative to positive. So, and 1, 2, 3. See, long way from it now, but nicely trending. That's I was talking about to Doreen. Nicely see the slope on those moving averages. That's nice. We've crossed here, gone up, and you're long, and you're in, and you're just trailing your stop loss up as the trend unwinds. Okay, so keep the stop loss, 2 or 3 candles behind where you currently are. So if that was the last candle that's closed, we can't make a decision on this one because it's not closed, okay? It's probably just closing now, but that's the last closed candle. So we count 1, 2, 3. So we want our, stop loss around about there somewhere, under perhaps the low of that. Some people would say the lowest of the 5 candles, a bit more conservative. Find what works for you, okay? And works. Doreen, Thanks. Best trading time frame for beginners with small capital. Well, there isn't a best time frame. Lots of people ask me that all the time. What's the best time frame? There isn't a best time frame. The thing with a small capital, it does reduce, big stop losses and big targets because it gobbles up your margin. So you need to trade a time frame that fits your personality. But there's no point trying to scalp if you're not prepared for lots of trades in and out very, very quickly. You've got a good account with um, tight spreads on it, like our zero spread account. Because it's all about margin and leverage as well, Doreen. So that's key. You obviously the more capital you've got, the more trades you'll be able to take, stick into your system. So again, I can't advise you on how much money to invest or when to buy and sell, but certainly have a strategy, have a system, find something that works for you. Okay. Lots of people trade the 1 hour. Lots of people trade 15-minute time frames. But I say find something that works for you. And strategies work. Good strategies should work across time frames. So here we can see we're clearly long here on the 15-minute time frame. Let's go to the 5-minute time frame. And the 5-minute time frame is clearly long. You would expect that because it's only it's a time frame down +1. If we go to the daily time frame up from 15 minutes. It's not as clear, is it, here for yen? It's sort of biased to the upside here from yesterday, but the parabolic SAR is still negative, and it's really sort of going sideways, isn't it? So there's no clear direction on the higher time frames. And Doreen, you're absolutely right. Scalping seems to be stressful and energy consuming. It can be, absolutely. It doesn't mean that you can't trade intraday, close all your time frames. Close all your trades before you go to bed so you can sleep comfortably. But yes, scalping can be too stressful. So have a look at 5 minutes or 15 minutes. Plenty goes on in 5-minute time frame. So this is the same chart we've been talking about for Peter on the dollar yen, but it's the 5 minute. So again, you see the 5 minute there, triggered earlier. And it's been long, all those candles there. But as a 5-minute trade, ask yourself, could you still hang on all these candles? So that's still long, and we're now 25 bars, 25 candles into when it triggered long. You would have been, again, you could have got out there because it's gone under the 9 period. So you would have got from there to there. That would have been, then you could have got back in there because it's still way above the 21 period. So again, trending higher. Trailing your stop loss up there. So find what works for you. Looking at that as a 5-minute trader, that's a key. That's now our key level, isn't it? That 109.38. This previous that was a resistance. We dipped down from that. Now becomes our support as we move forward. So again, but obviously this looks nice, but it hasn't moved very far. It's moved from 109.19. Well, it's moved 20 pips actually. That's quite a big move. So I'll ignore what I've just did there. In fact, it's moved more than that because that was our resistance area, wasn't it? So yeah, you get some quite good moves on these time frames as well, and it's exactly the same setup. So working across time frames, but you see big move there in the MACD. RSI was overbought, dipped down, but we just dipped down. It's continued, so it's still overbought. Here again, if we're using the ADX, you can see the ADX has been positive from a trending point of view all the way actually back here. Interestingly, it's normally a slow mover, but there we go. That the ADX there moved into over 25 back here as the trend was strengthening. See, we went down, but the trend itself was strengthening. Then it turned around to go long, and the strength of the trend petered out a wee bit, but it was still over 25, and then it strengthened. Then it's really sort of weakened, but then picked up in the last 20 minutes or so here on that 5-minute time frame. So it's all about time frames. Again, Doreen, I can't tell you what you see as opposed to gold and Nasdaq for beginners. Be careful with. Obviously, there are 3 different types of assets. We've got forex, we've got commodities, and we've got indexes. That's good to spread your risk across those 3 assets. But find of those 3 asset classes, you might find you're more comfortable trading gold or more comfortable trading Nasdaq or Forex. You might not be, might be equally comfortable or uncomfortable with all three of them. Who knows? So use that. A good system, a good strategy should be able to uh, uh, be applied to different assets. So let's use your example as an example. So the Nasdaq. I haven't really answered your question. I'm not really allowed. I can't suggest what to trade. Forex is volatile. Gold can be volatile. Can be quite slow as well. And equity markets, it can be a bit slower. But it's all to do. It's all to do with your approach and find the one that works for you. I'm sure you will if you keep at it. Okay. But just to use your example, this is a currency pair. Your other example was USA. What was the USA 100? There it is. USA 100. You can see it's here on the 1 hour time frame. It's not really doing very much, is it? It's sideways action. If we look at the 5 minute, it might be a bit more exciting. But, big candles, big movements, but same strategy. So again, sort of not a lot of up and then down, up and very volatile, being chopped out, chopped in. It's not doing much there. Markets have just opened, so we were down, and then we were. I don't know. This is the future, so but again, it's been airing to the upside. RSI's turned down here on this 5 minute time here, but so again, it's really because that's directionless yesterday and. It's running out of puff, and again, it's because we're coming to the end of the month, sort of thing as well. So, find what works for you during, and try them all. Don't rule anything out. Don't just look at Nasdaq for equity markets. Look at others as well. The FTSE, the USA 500. I don't know where you are in the world, but your own local stock market may be something you're interested in, because the thing about trading something local to where you are in the world, or is you get local news more than the international news. So, but obviously the thing with trading smaller equity markets, stock exchanges, the spreads will be wider, the liquidity will be lower. So be careful on that. So Peter's saying he got some good pips on pound yen. Good. Set my stop loss over my entry point. Okay, that's a lot of people do that. They like that. They're locking in profits. They can't lose if your stop loss is above where you got in. I would argue, though, a caveat on that is why do that? The market doesn't know where you've got in, where you've got out. Emotionally, it's a nice thing to hang on to, isn't it? Because it traps in your profits. But you don't know that the trend is going to. Why miss the big rally? But that's continued to move up. It was 15 minutes, wasn't it? Obviously, we didn't know this was suddenly going to happen, but there's a big spike candle there at right on 3 o'clock, and if you moved it up, fine. But it's still going, isn't it? So trend following traders. Let me get this bit. Say a bit. Peter, trend following traders would have got in there, and let's use the middle, the yellow line as to get out. So we were sideways, not a lot going on there. The last big candle was here, where the 9 and the 5, the yellow and the blue have crossed, and we've gone long there. Then we've got out there because we've closed under the yellow, so we've gone long there and got out there and lost because we got in at that point and we got out at that point. And then it's sort of gone sideways, haven't crossed again, then it's gone down. Looked like it was going to go short, it didn't. So again, another losing trade. But that would have also triggered a long trade as you closed the short trade within this next candle. So you had 2 losing trades, but now you've got more than compensated for the 2 losing trades there here, because you're still in, aren't you? Up. So have a system. Trade your system, patience, discipline, as I keep saying all the time. Realise being impulsive and interfering too much with the trade can be... Absolutely, my friend. You've got to let trades run, especially if you've got a trending market. Here, you just follow the rules, in and out, losing, a bit winner, a bit smaller winners, a bit small losers, as we just seen. and then it breaks out. So it just don't let it run. Give it time. Let the market breathe. Let the trade breathe. Give it energy. Let it run. And now it's running. And this is, now you can see from all this sideways, not a lot going on for all of this time. We've got our patience has paid off. We've taken a few small losses, and now we're well into the pips because we've got a nice, strong trend running as the moving averages here are all aligned. We've got the 5, the 9, and the 21 all nicely aligned. The parabolic SARF, I'm going to use it, is there. The signal line and the MACD is nicely aligned. We're getting a bit overstretched, which is what the RSI is telling us, but we're still pumping up. And here, if we're going to use the ADX on this, the ADX trade is the green line here, is 30 strong. We're at the top end here because we're at the top end of our other line here, and that's what the RSI is perhaps stressing, and why have we got that? Well, we've got to a big psychological level. We've got to try and test 90.50, 109.50, another key level. You could have could be a pivot point, support and resistance. That's another good way to trade intraday. Use the pivot point strategies as well. Lots and lots of different ways of trading, Doreen. Okay, right, guys, I'm going to call it a day because my voice is going and I've been on for over an hour and 20 minutes. So let me just go back to my Facebook friends who don't seem to be very many today. Indeed, there isn't for some reason. I'll have to speak to my colleagues about what's going on with Facebook. So if there's no more requests, guys, I'm going to wrap it up. Let's have a quick review of the data. In fact, the next big data points to come out. We've got pending home sales in the US. It's not. I'm saying it's a big data point. It's not a huge data point, but the durable goods GDP. Reading a note here from Action Economics. Let me just read this out to you. The 6.4% Q1 GDP growth failed to reveal the expected boost thanks to much weaker than expected inventory and net export data alongside a boost in the index prices. Q2 GDPs are all getting upgraded or getting reviewed. That currently sits around 8.5%. The revised Q1 GDP figures still document the updraft from vaccine distributions and 2 rounds of fiscal stimulus during Q1. Obviously, that's all getting plugged in. The infrastructure budget is all getting toned down a bit. That's still expected to come, but it's good. We've got the final reading. That was the second reading of GDP. So, and I say the durable goods undershot a bit, depending how you're looking at the managing. So, absolutely no problem, guys. Doreen, thank you for your time. Appreciate that. Thank you as well. Kangin, I hope you've learned something from that margin call. Write it down. And we're here to help you, my friends. So stay safe and love to everyone. And as we say, may the pips be with you, okay? And may your trend-following traders, follow the trend. If you're an oscillator trader waiting for the mean reversion, find your channels, your tops and your bottoms. So that's all for today. Take care. Andrea said she'll likely to be on tomorrow, so have a look with Andrea tomorrow as well. So all the best, everyone. Bye-bye.